The internet is littered with a ton of different day trading strategies, setups, and systems, and I'm not saying that some of them aren't profitable. But if I had to start over from scratch, if I was a beginner or someone struggling to make money from day trading, then the strategy I'm going to be sharing with you today is exactly where I would start. So in this video, I'm going to be breaking this entire strategy down based on a set of rules you can use like a checklist to check off every time you're about to place a trade in your own day trading. And this strategy is the exact strategy I used to get involved here on the Canada Yen, the trade you see on the screen down here on the 15-minute chart. So I'm going to talk you through this trade, teach you the strategy, and by the end of this video, you're going to have a full rules-based day trading strategy that is perfect for beginner or struggling traders. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you're new to the channel. Hit that notification bell, and I'll be right back after the intro and disclaimer. I'm glad you stuck around through the intro and disclaimer. You're gonna be happy that you did. If you're brand new to the channel, my name is Steven. I've been trading for over a decade, and on this channel, I try my best to give you every trick, tip, and strategy that I've learned through the past decade of my own trading experience in order to help you speed up your journey to profitable trading. So with that said, let's take a look at this strategy in this Canada Yen trade. This specific strategy uses two different time frames. And one of these time frames is going to be used for something very specific. It's going to be used to tell me if I'm going to be buying or selling. It's also going to be used to tell me where I'm going to be buying and selling. Let me explain more about that by taking a look at the charts. As you can see here on the Canada Yen, I have plotted this blue line. This blue line is the 50 EMA. So the first thing I want to see with this strategy is that price is trending above the 50 EMA. What that means is that price is consistently making higher highs, higher lows, higher highs, higher lows, and higher highs here on the Canada Yen. And anytime I'm using this strategy, this has to be happening above the 50 EMA. And a lot of people get confused by markets that start to do something like this. If prices, instead of making higher highs and higher lows in a very clear way, like they are here on the Canada Yen, if they were doing something like this, I would just not trade. So to keep this really simple and to keep you from having to deal with, do I need to trade or not, based on if the market is trending or consolidating, if it's not an extremely clear trend, meaning if you can't clearly see prices making higher highs and higher lows, then I just simply don't trade at that time and I wait for trend to become clear. In this case, it was a buy trade. I was looking for an uptrend, looking for prices to be making higher highs and higher lows. At the point that I see that prices are in fact making higher highs and higher lows, then I know I'm going to be looking for buy trades. After I know I'm looking for buy trades, that's step one. Which direction do I want to trade? The next step is where. Where am I looking for those buy trades? And for this specific strategy, it's only one place. That's why this strategy is so good if you're a beginner or a struggling trader with your day trading, is because we're looking for one place to place a buy or a sell trade. Saying place that many times felt awkward. But right here at the previous high that was just broken is the area I'm looking for price to pull back to in order to place possible buy trades. So we have the direction, which is up. I want to be buying this market because why? Because we are in an uptrend. Prices are making higher highs and higher lows. And we now have the where, which is what or where? The where is the previous level of resistance that's likely to become support in an uptrend. So now that I've broken that down kind of on a whiteboard, let's go to the actual trade itself here on the Canada Yen. So right here in market replay mode, based on the drawing I just did, what can you see happening? Do we have a valid uptrend? Well, are prices consistently making higher highs and higher lows? Yes, they are. Is it clear? Higher high, higher low. Now we just made a higher high. After I see this higher high made, my next step is going to be to point out the previous level of resistance in a zone that looks something like that. Once I have this level pointed out, I know I'm in buy mode because we're in an uptrend, and now I know where I want to be a buyer. It is in this zone we just pointed out in gray. So the next step here is to wait for price to pull back to this gray zone, and then I'm going to be dropping down to a day trading time frame in order to place my entry. So earlier I said I used 2 different time frames for this strategy. When I'm day trading, I'm always looking for trend, meaning what direction do I want to go? Do I want to be a buyer or a seller? So I look for trend on the 4-hour chart, and I also look for the structure level, or the where do I want to buy on the 4-hour chart. After I have these 2 things pointed out, I wait on this time frame for prices to get into that zone. Then I drop down to my day trading time frame, which is the 15-minute chart. So if we push the candles forward here just a bit, you can see that we now have gotten into our buy zone. So at the moment I get into that buy zone, I'm dropping down to a 15-minute chart. This is the 15-minute chart. I forgot to mention this during the recording, and here we are a day later. I'm editing this video, but I wanted to let you know you can also use this on even lower time frames by looking for trend and structure on the 1 hour and looking for your trades on a 5-minute chart. So keep that in mind moving forward. Now on the 15-minute chart, I'm looking for 2 very specific chart patterns using this strategy. I am either looking for a double bottom in this zone, or I am looking for a head and shoulders pattern in this zone. Shoulder, neckline, head, second shoulder, push higher. Those are the only 2 ways I'm going to be entering a trade with this strategy once the other conditions I just said are met. So here on the 15-minute chart, let's push price forward and see what we get. Right here we get a double bottom, but what I'm going to be waiting on is not just the double bottom, not just the head and shoulders pattern. I want to see a break of the neckline. I want to see a breakout showing me that buying pressure is going to continue past the double bottom. So with that being the case, and that being my actual entry, I have no reason to enter yet. As we push forward, I still do not have a reason to enter the trade because we have no close above the neckline of this double bottom. So we continue waiting to see what price does. We continue waiting for a close above our actual neckline on this double bottom, which eventually turns into a triple bottom and eventually does in fact break above the neckline of our double bottom. So with this being the case, we finally get a close above the neckline of this double bottom. That is my actual entry. So after all the other things are met that I'm looking for on the 4-hour chart, we have price in an uptrend, making new higher lows and higher highs. We have the previous level of resistance that should turn into support that price has now pulled back to. I've now dropped down to the 15-minute chart, and I'm looking for what? I'm looking for a double bottom or a head and shoulders pattern with the break of a neckline for confirmation. Once I get that, that is when I'm actually going to be pressing the buy button. So that's when I decided to actually place this specific trade, and we'll jump out to the 4-hour for now, hit the play button. As you can see, since doing so, prices have in fact pushed higher. And this specific trade is currently at about a 2.1 to 1 reward to risk ratio, just using this very simple strategy. Now, you can say I wait for trend, for structure, and for chart patterns to trade. But if you do that, you're probably going to be very inconsistent in your trading, which is why it's important to create a framework that is rules for this specific strategy, which is what I'm going to show you now. I do this through a process I call CEST. It's an acronym that if you've been a part of the channel for a while, you know all too well. CEST stands for conditions, entries, stops, and targets. So for this strategy, what would the conditions be? The conditions would be 4-hour chart is in an uptrend and is pulled back to the previous resistance that was broken in this uptrend. Those are the only conditions I'm looking for this strategy. What would be the entry? The entry for this strategy would be we're in our zone and price either makes a double bottom and breaks above the neckline, or makes a head and shoulders pattern and breaks above the neckline of that head and shoulders pattern. The next thing we have to do is establish rules for our stops and targets in order to be consistent. For me, the stop loss goes below the zone that I created, and I personally just manage my position on a lower time frame, which is exactly what I'm doing now. And those are the rules for a bullish version of this strategy. Just so you can see that I not only trade this way myself, I also sent this trade out to all the members of the TTC Forex University. You can see that on the left side of your screen. And again, that's something included in the TTC Forex University. If you're interested in learning more about that, it'll be the top link in the description, or you can go to www.thetradingchannel.com. Otherwise, what I want to do now is move on and show you a bearish version of this strategy. The bearish version of this strategy is the same exact thing, just flipped upside down. Let's take a look right now on the whiteboard. So instead of being in an uptrend, let's say this is our 50 EMA, we want to see prices making new lower lows and lower highs now below the 50 EMA. When that starts to happen, instead of looking at a previous resistance, we're actually going to be looking at the previous support level that price has just broken. We're gonna be waiting for price to get back up to that level. We're gonna be dropping down then to lower time frames to look for either double tops or a head and shoulders pattern, and the entry will be the break of the neckline of the double top or the head and shoulders pattern. Let's take a look at an example of this on the charts. Here we have the pound yen. Prices are pushing below the 50 EMA. Are they also creating new lower highs and lower lows? Well, it's pretty clear to see that we have a high here pushing to a lower high, a lower low, an equal high, and now a lower low. This would be a good trending market to the downside, meaning I'm looking for sell trades. That's the direction I want to look for trading opportunities in now, because of the fact that we're below the 50 EMA, creating lower highs and lower lows in a downtrend. The next step is to point out the area that I see for a possible trade. That area is always going to be the recent level of support that was broken. In this case, we have this move here, back up, back down. Previous level of support that was broken is right here. Already have that zone drawn in for you. What's the next steps? Well, now we have the conditions met, right? The conditions were 4 hour shows me trend. In this case, it's a downtrend. And 4 hour shows me an area of structure like we have here that I'm going to be trading in. The next thing we wait for is to pull back up to this area. Then we take a look at entries. Let's hit play and see when we actually get into our zone. We are now in our zone. So let's take a look now on a lower time frame. So as you can see here, we've come into our zone starting all the way back here, but have we had a double top or a head and shoulder pattern that broke below the neckline of that double top or head and shoulder pattern? Well, no, we have not. We get this like double top right here, but the neckline would be way down here. We get another double top here, almost like a triple top. But in that case, we would need this level to be broken. We have not gotten any type of double top yet that's broken the neckline or a head and shoulders pattern that has broken a neckline. So let's keep pushing price forward and see if we actually get one. Here we have another double top. Okay, so now we're looking right here. This is our double top. We have one top here, followed by our second top. All we need is a break below this neckline, and we have a valid trade. So let's push the market forward one more time, and there we go. This would be a valid trade. And the way I would be looking to trade this is by placing a stop loss, depending on if the price, the top of the double top, is close to or far away from the top of my zone. If it's super far away, let's say we get a double top way down here, I'll do it over here, way down here, I wouldn't be putting my stop loss all the way above my zone. I would just go 1 ATR or 10, 20 pips, 5 pips, whatever you want to do. I would just go above that double top if it happened super low in the zone like this. But for this case, this double top happened very high in the zone. So with that being the case, I'm just going to put my stop loss right above the zone. I'm going to aim for something like a 2-to-1 and be wary of my levels of structure. I see this level here as a pretty major little zone. So what I'm gonna do is go in between that zone, and that's gonna be my target. So there you go. The trade is set up. We have all of our conditions met. Let's hit play and see how it worked out. Oh no, we had a losing trade, which is a great segue into the next part of the video. I wish that I could tell you that this strategy would win 100% of the time. Trust me, if it would win 100% of the time, I would have way more money in my trading account right now. And I wish I could tell you that there was any strategy out there that could win 100% of the time, but that's just not the case. Winning 100% of the time while trading is not possible. What that means is that you will have losses. No matter what strategy you're trading, no matter how good you get at trading, you're never gonna know exactly what the market's going to do. Back whenever I first started trading, for some reason, I truly believed that the reason professional traders made money is because they knew exactly what price was going to do. And every trade they placed, they just won those trades. But throughout my trading career, I learned that that's not the case at all. The truth is that we are trading as professional traders. Whenever you become a professional trader, you will be trading based on a statistic advantage that plays out over a large sample size of trades. So it's not about knowing exactly what the market's going to do. It's about trading a proven rules-based system that's proven to be profitable over a large sample size of trades, and that you know will create profits if you do it over and over again, even though it will have some losses in between. So now that you know that losses are a part of trading, and I'm sure that if you've ever experienced a loss, you know that it can be somewhat emotional. It can make you want to switch strategies. It can make you want to shrink your target up on the next trade, or push your stop loss higher and higher or lower and lower to keep from losing money. You get really emotional during losses, and that's completely normal. But what we have to do as traders is find a way to mitigate those emotions during losses. So, since you know that losses are a part of trading, what are some ways we can mitigate those emotions? Well, the first one is really simple. The first one, this is what I teach all of the students in the university, is risk management. The more money you are risking on each trade, the more emotional you're going to be. And look, you may have a day in the future, once you're already a professional trader, you understand everything there is to know about trading, you have your whole trading plan set up, you may choose to risk a pretty high amount because you're good at that point. And you'll know when that's the case. You'll know when you're good at trading. But until that gets here, until you become good at trading, your point in trading is not to try to gain as much money as you can by risking 10% or more of your account. If you do that, you will blow your account. And the reason this doesn't work when you're a beginner or a struggling trader is because you're not good at trading yet. So while you're in the beginner/struggling trader phase of your trading career, your risk management needs to be much, much lower so that you mitigate the emotions you have when you have losses and you lose money slower. Risk management, the amount we risk on each trade, can help us to gain more over a certain period of time, but it can also cause us to lose more over a certain period of time. So if you're a beginner or someone just starting out or even someone who has just become profitable, then risking a ton of your account on every trade is more than likely going to end in you blowing that account or pushing that account to such a negative balance that you can't control your emotions any longer. So the way we handle those emotions that we have whenever we're losing trades is by having a good risk management plan. The second way we do this is to have more confidence, more faith in the system, strategy, or strategies that we are trading. And the way we gain more faith in those systems is through the process of backtesting. Backtesting is nothing more than taking the rules, like you just learned in this video, the CEST rules. You take those rules, you look back in historic data throughout the past 100 trades or more, and you ask yourself, how many times did it win versus lose? When it won, what was my reward to risk ratio? And with these two numbers, you can figure out if a strategy is likely to be profitable in the future. The only strategies you should be trading are strategies likely to be profitable in the future. And the way that we determine if something's likely to be profitable in the future is through backtesting. And this backtesting process also gives us an incredible amount of confidence that helps us deal with drawdowns, losing trades, and helps us handle our emotions and have a better trading mindset. Now, mastering a strategy or strategies that makes money over time, mastering your risk management, and mastering your trading mindset or trading psychology is something that can be really difficult on your own. And for that reason, I'm looking for 500 new or struggling traders to mentor throughout the rest of this year on their journey to profitable trading inside of the TTC Forex University. If you want to learn more details about that university, all you gotta do is click the top link in the description or go to www.thetradingchannel.com. It obviously comes with a full university style course. It comes with the Pro Trader Report every Monday talking about the zones I'm actually looking to trade in. It comes with 3 to 5 trading alerts per week of trades I'm actually taking based on the strategies you're learning in the course. And it comes with priority email, meaning that you will have contact with me directly for any trading related questions that you may have. On top of all that, it also has a a 30-day money-back guarantee. So if you'd like to check out the details of that, again, top link in the description, or go to www.thetradingchannel.com. If not, completely fine too. I wish you all the luck in your future trades, and I'll talk to you in the next video.